It's Brian Preston, the money guy.
Okay, we've got a question from Connor Kinsey from YouTube.
All right, Connor.
He says, I'm looking to buy a house in the next 1 to 2 years. I'm currently maxing out my 401k and Roth IRA. Congrats on that. But don't have much extra to save for a down payment. Should I reduce 401k contributions for a 20% down payment? He's only 26 years old, so this is his first home.
Okay.
And he did add on, if I can save enough for the 20%, should I, or should I just keep maxing out my retirement accounts? I think that's really the question. Retirement account, 20% down.
And now, obviously, you are well seasoned in the home buying world.
I just did this a few months ago.
You've done this. But I think a lot of your friends ask you, like, hey, how do I do this 20% thing? Oh, man, we're here. By the way, I think every real estate market in the entire country is white hot right now.
It's crazy right now.
So we
so
talk
many
about
stories.
what's going on here, but I think it's everywhere. It's all over the country. The housing market is hard. So if you are a young person starting out, trying to get to that 20%, it can be daunting, right?
It feels kind of impossible. It does.
And home prices keep going up, so you might be, okay, I'm going to get to that 20%. And by the time you finally get that 20%, that house you were going to buy is now 30% more expensive. Like, we're actually seeing those sorts of things happening. So first, let me sort of give you a little reprieve. When you buy your first home purchase, now this is a unique opinion to the Money Guy Show. I don't know that a lot of financial folks would necessarily agree with this, but that's okay. We're happy being different. For a first-time home purchase, I don't know that you have to put 20% down. Yes, it is ideal. Yes, there are some benefits to doing so in terms of loans that are available to you and not having to pay PMI and those sorts of things. But it is a really, really hard thing to do, especially in a white-hot housing market. And there's a good chance you don't want to put the rest of your life on hold. If you're waiting until you get, the house with the white picket fence to start a family, you might not want to have to make your family decisions based on just this crazy housing market. So we give you some reprieve. We don't think when it comes to your first house, you have to put 20% down. And even with interest rates as low as they are right now, there are even some loan options available for first-time home buyers or even someone who doesn't put 20% down, where potentially you can still get out of PMI. So don't think that if I don't do 20%, I just have to pay that mortgage insurance. That's not always the case.
And let me offer to you guys give another rule on house buying that honestly kind of changed my life and made me think maybe I could buy this house. And it was to keep the monthly expenses to just 25% of your gross income. And listen, so you do have to pay the PMI, or you're looking at, okay, how much could I afford? Calculating what that monthly expense is going to show you what you can do and what you can actually afford, even if you put less than 20% down. And it actually helps you do it still smart, but lets you get your foot in the door as a first-time home buyer in this crazy market, or in like bigger cities, even when it's not crazy like it is right now. Like, things are still just more expensive in near cities. So first thing is, I don't think you have to do 20% down. So just take a deep breath. Okay, so now let's say, but I still got to come up with some money, right? I still got to come up with 3.5% or 5% or 10%. And he already said, I'm maxing out my 401k, and I think he said what he says he's doing his IRA Roth too.
He's maxing out his Roth. There's just not a lot of extras to save. This again is where I think is a little unique. Remember, money is a tool that will allow you to accomplish the things in life you want to accomplish. It is a means to an end. It is not the end itself. We tell you all the time, we want you to be saving 25% of your gross income as fast as you can. Well, it'd be very easy when you graduate college to eat cat food every single night for dinner, and you can save 25%. Now, would we recommend you doing that? Absolutely not, because you have to let life happen. You have to do this thing. So I want to give you permission. It's okay, as you're working through the financial order of operations, and maybe you've been great maxing out your 401k, and maybe you've been great maxing out your Roth, but life happens, and you need to come up with a down payment. I'm going to give you permission. Yes, it's okay if you have to back down your savings rate for a season to be able to accomplish those short to intermediate term goals. They're going to have a long-term impact. Now, if you're asking, hey, can I stop saving because I really want to go buy that Tesla? No, that's a different type of thing. But when you're talking about housing, when you're talking about the place where you're going to...
It becomes an actual necessity.
It
does. If you want to
have
kids, or like, in our case, like apartment rent is so expensive. And in a lot of cases too, it was like, maybe we need to just build equity. Like, there's so many different considerations.
And so I want to give you permission. It's okay to back down, do what you have to do. But then, and here's the important part, don't let too much time pass before you get back on the path. So once you do have the amount saved, and once you've figured out the affordable house that you can live in, and once you've got, get that savings back on track.
Yeah.
And remember, when you buy a first house, if money is tight and you're getting that down payment there, it doesn't have to be fully furnished inside of the first year. And you don't have to have all of the nice trappings of home ownership. My wife still makes fun of me to this day. Very first house that I bought, I had the $8 Home Depot paper blinds on the windows for like 2 years. I'm not telling you to do that. I'm just saying it's okay to sort of live like no one else. That seems like a good thing to say, like early on in life, so that you provide opportunities for yourself later on. Because remember, the earlier you can get back on track, the sooner that army of dollar bills can start building.
Right.
But don't allow the desire for your army of dollar bills to start building to prevent you from actually living life and enjoying the present. That's why we give the 20-25% rule.
Literal living proof of this. Just in the past, like, because like I said, this was a few months ago, and just in the past couple months, my husband and I have been like, all right, we got to like redo all of our budgeting, because now that like the house is bought, like the couch is bought, all the other things can wait.
Yep.
How are we going to save for it? And it's working out great though. Like, highly recommend.
And you love it, right?
Yes,
Home
it's all
ownership
good.
is wonderful.
And I have broken blinds. One of my blinds is broken in my kitchen. I'm just like, cool, I'll get
I can
to
deal
that.
with it.
I'll
Yep.
get to that
Love it.
eventually. Let's budget first.